According to our next guest, one space where property demand does remain strong is retail, seeing strong leasing momentum and foot traffic across his portfolio. Joining us this morning is Rick Caruso, founder and CEO of Caruso, a real estate giant in Southern California that owns 3 of the top 10 retail centers in the country. Rick, good to have you back. Good morning.
Good morning. Good seeing you, Carl.
I tell you, we were worried for a while, especially in the depths of this latest banking episode. Just talk to me about how you think we've rebounded from that, and is it about is it a luxury story specifically, or is it broader than that?
I think it's more than that. I mean, there's certainly a luxury story to it. The luxury retailers are doing very well. The growth is very strong. They're expanding mightily, certainly here in Southern California and Los Angeles. But I think it's a little bit more across the board. But listen, also, you can't lump everything into one sort of sector. So geographically, it changes. Our properties are all outdoor properties, very much focused on an experience that we're creating and making sure that we've got properties that are highly productive, highly enjoyable for the consumer on the properties. We're out to enrich people's life in a great setting and driving sales. And so our sales per square foot growth across our portfolio is running 20% this year. We're very happy about that, and demand for our space is very high.
How long-lasting can that be, especially when people continue to write the obituary? It's a rolling obituary now of the U.S. consumer.
Well, you know, they've been writing a lot of obituaries. You know, brick and mortar is dead, and everything's going to be online, and the consumer is dead. In spite of the fact that we're talking about a recession, and we may go into a recession, whether it's slight or whether it's larger or moderate, the consumer is still spending. We're seeing consumer spending up. Our attendance on our properties is up 16%. So the consumer is spending the savings that they've had. Now, I think that we may see some falling off a little bit geographically. There's no doubt about that. But certainly at the higher end, it's staying. But it's also across sectors. I mean, look at the sales, Sephora, Nike, Ala Yoga, across the board, Apple in their retail physical spaces, very, very strong. So I'm pretty optimistic about where we're heading, but I'm also realistic that in an environment with rising interest rates, which is my biggest concern, we're going to dampen down spending, and we may have some pulling back by retailers on their expansion plans until there's a little bit more clarity. But retailers are not going to be rolling the dice. They don't have to. They're going to go back to their good old friend, which are physical stores that help drive sales and profitability for them.
California has a bad reputation now, Rick, for retail, for commercial real estate. A lot of it is San Francisco, but LA too when it comes to office distress. So are you saying that that it's not true, or that you're sort of bucking that trend because you're in luxury retail?
Well, I think we're an anomaly. There's no doubt we're in a different category. But I will tell you, Sarah, and you're absolutely right. You look at the downtown regions, San Francisco, Los Angeles, Chicago, parts of New York, Seattle, Portland. The urban centers are suffering. You look at downtown Los Angeles, there are 11 buildings at or in foreclosure. 2 have already gone back to the bank. These are high-rise Class A office buildings. So the domino effect, especially on small retailers, which is really sad, or restaurateurs. If you don't have daytime population, those businesses are going to suffer, and they are suffering. And it's driven by crime in the downtown regions. It's driven by homelessness, what's happening on the streets. We've got to change it. And I think a lot of these cities are blind to what's happening around them, and the elected officials are not leaning in and doing something about it, which has to happen. There's other sectors of Los Angeles that are doing well in office. Century City, for example, is a strong market.
I know you were trying to fix that. You're running for mayor. You had some support, didn't quite get it. Are you going to continue to pursue these opportunities, especially if you blame a lot of what's happening on the politics?
Well, I'm always going to be long on Los Angeles. I'm always going to be active. I've been involved actively for 40 years, you know, in the city of Los Angeles. So that's not going to change. Whether or not I run for office again, I don't know. Time will tell. But what I am going to do is do everything I can to make sure that these issues come to the forefront and people realize that they're solvable. The homeless problem is solvable. Rising crime is solvable. We need to have elected officials, quite frankly, that have some backbone and courage and make some good, tough decisions that make the livability of our cities better.